What's up everyone, welcome to Stockton. It's a pleasure to meet all of you. On this channel, we talk about stocks before they start blowing up, say goodbye to chasing stocks at all-time highs, and say hello to making some money. So if this sounds like something you want to take advantage of, then hit that beautiful subscribe button and like the video. Now let's get to it. Before we get into the video, I have to say that I'm not a financial advisor. Anything I say is just my opinion and is for entertainment purposes only. Having said that, if I'm talking about a company, I'll let you know whether I'm personally going to invest in it or not towards the end of the video. But you should always do your own due diligence, so with that out of the way, let's get started.
Microvision just dropped a bombshell and the stock is down 11% in after-market hours. Microvision announces $140 million at the market equity facility. Microvision Inc., a leader in MEMS-based solid-state automotive LiDAR and microdisplay technology for augmented reality, today announced it entered into a $140 million at the market equity offering agreement with Craig-Hallum Capital Group. Under the agreement, Microvision may from time to time, at its discretion, offer and sell shares of its common stock, having an aggregate value of up to $140 million through Craig-Hallum. Microvision intends to use the net proceeds from the ATM, if any, for general corporate purposes, which may include but are not limited to working capital and capital expenditures, as Microvision continues to pursue its strategy to enhance shareholder value. So it's important to keep in mind that this isn't a traditional offering, like they're not going to dilute shareholders all at once. Basically, ATMs are a type of shelf-based registered offerings under which an exchange-listed issuer incrementally sells shares of its listed securities directly into the market at prevailing market prices. Issuers have control over the timing and size of each sale and can modify these parameters as desired. So basically, this differs from traditional underwritten offerings where a fixed number of shares are sold at a fixed price all at once. If you're long on LiDAR and Microvision, then this isn't necessarily a bad sign, as the money will help them strengthen their balance sheet. The CEO of Microvision went on to say the following: "I am proud of the progress our company has made advancing our automotive LiDAR program. We look forward to more broadly promoting our technology to OEM and Tier 1 suppliers and publicly testing our sensor with external test site partners. A strong balance sheet gives our potential customers and partners confidence that Microvision is capable and trusted long-term supplier." So if anything, this could turn out to be a really good time to buy the dip or even swing trade this stock, because I have a feeling that Microvision will bounce back relatively quickly. Just wanted to keep you in the loop with this latest development. Have an awesome day, and I'll see you in the next one.